sometimes you can miss an opportunity. Opportunity is in front of you. Opportunity can be presented. You can be presented different options, and you can miss it.
Soldier boy, tell him, waka flocka flame.
In 1998, founders Larry Page and Sergey Brin initially considered selling Google to Excite for around $1 million. Excite declined the offer, though Yahoo was also hesitant to acquire Google in its early days, not recognizing the potential of the search technology. Fast forward to 2002, by then Yahoo did recognize Google's value and proposed to buy it for around $3 billion, but Google countered, asking for $5 billion. Yahoo turned it down, seeing that this price was too high. Fast forward to 2008, guys, Microsoft made a $44.6 billion offer for Yahoo, hoping to gain a stronger foothold in search. Yahoo declined, believing it was undervalued and could thrive on its own. Now, this decision was widely criticized as Microsoft ultimately withdrew its bid. Fast forward to 2016, 8 years ago, Yahoo sold its core internet business to Verizon for $4.5 billion after years of struggling with leadership changes and a declining market position. I hope y'all getting the story here. This marked the end of Yahoo as an independent internet giant. So what is the moral of the story? Now, let me just tell you this. Now, imagine the late 1990s. Yahoo was then a tech giant, had multiple opportunities to acquire Google. They had a fledgling search engine at the time for a fraction of what Google would have eventually be worth. But Yahoo underestimated the potential of search technology. And by the time they actually realized it, Google's value, the price had soared beyond its reach. Years later, after declining Microsoft's $44 billion buyout offer, Yahoo was ultimately sold to Verizon in 2016 for $4.5 billion. Now, in contrast, y'all, Google, with the current market cap exceeding $1 trillion, $2 trillion, became one of the world's most valuable companies, as you know right now. What do you say? Google it. Now, the lesson: ignoring transformational technology comes at a steep cost. And now, where we are now, we're at a similar tipping point with Bitcoin, cryptocurrency, and blockchain. What Yahoo was to Google, some might say the traditional financial sector could be the crypto. If it continues to underestimate the potential, but in this case, the stakes are even higher. As BlackRock, if you don't know what BlackRock is, they are the world's largest asset manager, and they're leading the charge for institutional crypto adoption. Stick with me, y'all. I want to take y'all on a trip. 2030 is the goal. The race is on for traditional financial giants to embrace blockchain-based finance and tokenization, or risk being left behind. Now, unlike Yahoo, BlackRock and other early movers are seizing the opportunity, recognizing that blockchain technology, digital assets, and tokenization could redefine global finance. Here's how. BlackRock's recent push for a spot Bitcoin ETF signals institutional acceptance. Now, after initially dismissing Bitcoin, BlackRock CEO Larry Fink literally now calls it digital gold.
I was a skeptic. Yes. I was a proud skeptic. And I studied it, learned about it, and I came away saying, okay, my opinion 5 years ago was wrong. Here's my opinion today. This is what I believe in today. I believe the opportunity today. I believe Bitcoin is legitimate. I'm not trying to say there's not misuses like everything else, but it is a legitimate financial instrument that allows you to have maybe uncorrelated, non-correlated type of returns. And so I'm a major believer that there is a role for Bitcoin in portfolios. I believe you're going to see that as one of the asset classes that we all look at. I look at it as digital gold, as I said before, and I do believe there's a real need for everyone to look at it as one alternative to, I would say, the optimism that I have in the world. And I believe there's a great industrial use for it, and I think a lot of people are missing that.
Now, this change reflects a seismic shift. Bitcoin and crypto assets are no longer fringe investments, but are moving towards mainstream, towards financial portfolios, and BlackRock is positioning itself as the front runner. Tokenization is poised to transform illiquid assets like real estates, bonds, and private equity into tradable digital assets. BlackRock's investment in tokenization platforms like Securitize, which I did a video on this, you can go look at one of my other videos, and its role in backing Athena's USTB stablecoin, which is linked to tokenized US treasuries. This simply highlights the shift, y'all. The potential market for tokenized assets is projected to reach 16 trillion by 2030. Can you imagine that? With real world assets seamlessly traded on blockchain networks, which enables retail and institutional investors to access new asset classes. Now, if you don't know what I'm talking about, then you need to do more research. Now, in BlackRock's words, this represents revolution in finance. We're in a revolution, guys. The stablecoin and fiat transformation. As concerns grow about fiat stability, whether it's in your country or the United States, stablecoins like Athena's USTB, there's so many, I just have to make sure I get it right. They're emerging as crypto-backed alternatives with robust transparency and security. Now, unlike traditional stablecoins, USTB is fully backed by tokenized treasuries through BlackRock's USD Institutional Digital Liquidity Fund. That's BIDL, right? Now, this is just one example of how stablecoins could bridge the gap between traditional finance and crypto, making digital assets viable for everyday transactions. 2030 is the goal. 2030 is a milestone year. By 2030, many institutions anticipate that regulatory and infrastructure frameworks will be in place to support a fully integrated crypto and traditional financial system. I'm telling y'all, I'm not making this up. It's out there, it's real, go look for it. BlackRock's stance suggests that by 2030, crypto won't be a niche investment. Instead, it could underpin a new financial ecosystem that's more accessible, transparent, and decentralized, where tokenized assets coexist with traditional markets. And what you have to understand is that they're getting in position. So what do you think you need to do? Now, there are a lot of financial implications, the implication that exists. This convergence, in my opinion, y'all, signals a clear message to financial institutions. Adapt or risk becoming obsolete. Just as Yahoo missed a chance to acquire Google, financial giants today face a choice: embrace crypto, tokenization, and blockchain, or risk falling behind. Same way that Google reshaped the internet, Bitcoin and blockchain could revolutionize the financial landscape. And of course, with BlackRock leading the charge, we're seeing a historical shift that could make digital assets tokenized, real world assets, and blockchain integrated finance the new standard by 2030. I mean, companies betting on crypto and blockchain today may find themselves as dominant as Google is in tech, while those who ignore it may face the same fate as Yahoo. So what are you gonna do different? If they're doing what they need to, what do you think you need to do? I'm just putting the information out there, y'all. Whatever you do with it is up to you. Now, just as Katrina embraces vibrant colors and cultures, the world of finance needs to embrace the colorful, complex, and transformative power of crypto and blockchain. By 2030, financial landscapes could mirror this lively scene, full of bold moves where tradition meets innovation, and where institutions like BlackRock see crypto not as a disruptive outsider, but as an integral part of the experience. The choice now, like that of Yahoo years ago, is whether to join the new wave early or wait until it's too late. So as the world races to 2030, crypto might just be the fiesta that finance has been waiting for. It's your boy.